Hey guys, what's up and welcome to a new Tesla update video. As usual today, we're going to be taking a look at Tesla, see what happened in the market today, what we can expect for next week. Now, don't forget guys, really important that next week, you remember, is Monday is an off day, right? The market is, of course, going to be closed on Monday. So it is going to be a 4-day week. Once again, apparently, it feels like we just had a 4-day week, like not that long ago, but nonetheless, Monday is an off day, guys, so keep that in mind. So probably no video unless something crazy happens, maybe unrelated to the stock itself, maybe some big news, whatever that can influence the stock. I'll make a video. But all that being said and done, if you enjoyed, don't forget to hit that like button, subscribe, all that stuff. Tesla closing the day at 650 and 6 cents, which is an increase of 1.68%. Now the high of the day was around 3.3%, I think, something like that. 3.3, 3.4, give or take, I think was the high of the day. And the reason I remember that is because that's where I sold. For the people that remember, I did actually remember how I said I bought 50 shares yesterday. How I bought like 10, and then I bought 30. I actually bought 30. Surprisingly, I bought it like almost exactly at the bottom. It was at like 626.6 or something like that. It was like crazy. I did it while driving in my, I'm just saying that. Just, I was parked. I was at a red light. Saw the price dropping. I'm like, let's buy 30 shares. Anyway, the point is the fact that I got pretty lucky with that, I'll admit, timing the bottom like that. But nonetheless, I did sell today as it went up to here. I sold at 660, actually, is where I sold. And I took that profit from here to here. The average was around 632, I think it was, or 633. So pretty much from here to here, I sold the 50 shares, which was great. I'll take the trade. Nice little, money on the side. I'm not complaining at all. And the reason I did that is because, the main reason I did that, guys, is because, so even though I still personally believe that, we had the double bottom, I still believe we're going to get a rally, like a bear rally. I want to be specific about that, a bear rally. It's because I'm just overall very long already, that I have like a lot more, I already have a lot of exposure to the upside, and I wanted to have a little bit more of a cushion to the bottom in case we actually somehow maybe, because in theory we could still definitely break 620, and if that happens, we are going to start plummeting down to 600, maybe even lower. So because I already have so much positions ready and set up for going up, I wanted to make sure that I still have positions ready for in case we drop even further, in case something horrible happens. Like, who knows? You never know, right? Sometimes it's unpredictable, of course. So, you always want to make sure you're ready for just in case something were to happen, and maybe we just happen to break to the downside, just, at the possibility of it. Because the worst thing is if you do break down to the downside and you don't have any cash left to buy the dip, for instance, for, whatever, or, DCA, whatever you want to call it. One of the worst feelings ever is what I've learned from my experiences. It's a horrible, horrible feeling. So I try to avoid that whenever I can. Anyway, that's not the point. The point is the fact that we're going to be talking about the stock, right? So overall, a pretty decent day. You can see we are constantly getting rejected still at this level. It's a pretty tough level, this kind of, area up here to kind of break through. But, overall, not a horrible day. And the main reason is because, again, not only did we bounce off that 625-ish level, but we actually bounced off of that yesterday, and we still had a nice, fairly nice green day today. You can see the SPY and the QQQ. So this is a pretty interesting candle. These kind of candles usually actually also signal potential reversals, where it's kind of like indecisive like this, but it's still in the green. The issue is that it did end lower than yesterday's close, which is the part that I'm not happy about. But all in all, I kind of had a revisit, if you will, on the SPY, based on what I've seen from other people that I respect with their opinions. And I've kind of redrew the potential trend line that we are currently in on the SPY, which seems to be something similar to this, which is pretty decent actually, right? I'm still a strong believer that the market overall, of course, including Tesla, is going to follow or find a bounce more or less where we are at the very moments, potentially maybe a little more red, but I'll be surprised if it's much more, and find essentially a bounce somewhere around the current levels that we're at, give or take. So I'm still a strong believer, but again, I have cash, and I sold the position, just for the sake of, maybe I'm wrong. There's still definitely like maybe a 20% chance I'm wrong, but I'm like 80% chance that we are going to be getting probably a bounce and most likely a bear market rally, similar to what we had here. Probably not to this extent or whatever, or even like maybe something like this, maybe even better than this, but something similar to this, I would say, coming up pretty soon. And the main reason is because for Tesla specifically, the double bottom bounce I think is fantastic. The SPY and the QQQ are both sitting essentially at the bottom of their channels, which I think, for the QQQ, you can either go up to the red or the yellow channel here. And a lot of things are just sitting at the bottom of their channels, ready to bounce. The support's been kind of shown. And I just like the way it's looking personally. Let me go ahead and quickly remove this. So yeah, that's kind of the main thing I'm looking at right now. The main thing I'm liking. The VIX The VIX is the one that's interesting. This is the one that we really want to make sure we're paying attention to, because this also affects Tesla and how it moves. We want this thing to plummet. We really, really want this to plummet. We want this to drop as hard as possible, potentially back all the way down to maybe retest again somewhere around the 26 levels. So this is the part that makes me still a little bit unsure as to how far of a rally we can really get, because like it feels like if the VIX drops all the way back down to, like, let's say 26, it doesn't feel like the SPY is going to be moving that much from here, in all honesty. So that's the part that's still making me a little bit cautious, which is why, again, I have that cash ready just in case, in case we fall, in case it doesn't go the way I think it will. I essentially have a backup, if that makes sense. But nonetheless, taking a look at Tesla as usual, right? So we have the double bottom bounce. Now, the main thing we want to be seeing, of course, guys, is going to be a breakout of essentially these three trend lines, if you will. The red one, then the two yellows, right? We really want to see a breakout, ideally above the second most outer yellow line. We really want to see a breakout above that, right? We want to see a breakout above the 21 EMA, which is currently sitting exactly on that yellow line, the trend line that we just talked about, which is about $710. Like, we absolutely want to see that being broken. The Bollinger Band, we want to get above the white band, which is also sitting around that 700 level. Want to get above that, and we want to maintain above that. It's extremely important that we do that. So those are like the things that you really want to start seeing, but you also want to be looking for signs that can point to that potentially coming to fruition, maybe relatively soon. And currently the biggest sign to me is, again, the double bottom bounce. And so far we are bouncing off of that. And of course, like I said, the kind of 25 to 20 level being extremely important to make sure that we don't collapse. Similar to how we had that inverted head and shoulders pattern where we had the shoulder, head, shoulder. I was saying how we don't want this kind of 680-ish level to collapse. If that collapses, that breaks the pattern. And that's exactly what happened. We broke 680. Unfortunately, we happened to do it pre-market, but we came back up to test it pretty much on that same day that we broke it pre-market, got rejected at 680. And that right there was a surefire sign that, or a sure sign that, it's doomed, essentially. We're falling down. And that's exactly essentially what happened. We had this kind of weird rally over here, but then we just followed with more red, of course. So, you want to pay attention to those kind of things where, like, these patterns are there. I mean, they're very good patterns, but, like, of course, like anything, nothing is guaranteed. They can break. So that's why you want to always pay attention to the levels that are critical to maintaining the pattern and to maintaining that bullish reversal potential here. So that right there, guys, extremely important, 620 to 625. Make sure you are looking at that. Then, of course, we also want to be looking at the moving averages as per usual. So today we got rejected at the 5-day moving average. You can see pretty much exactly on point, which is around that 660 level. Got rejected pretty much exactly on that. Take a look at the 10-day moving average, which is, again, relatively close to where the Bollinger Band sits, which, again, is going to be sitting closer to that 700 level. So we definitely want to, start getting above these. And, again, most importantly, holding above them. The RSI, like I said, even though I said yesterday it was pointing straight down, I'm like, it's not too bad yet. That's fine. Today we have an RSI, now it's pointing a bit more up, of course, right? So it's showing decent signs of a potential reversal here, right? Obviously, the main thing that you want to pay attention to, in my opinion, of course, is going to be the bearish divergence happening. So again, the most important thing to see here that I personally like is the fact that, let's draw here quickly. We have a low here, we have a lower low, and we have another lower low. But what do we have here instead? When we had this low over here, we have the RSI sitting over here. This stock price drops even lower. This drops a higher low. We drop even lower, another higher low. That, ladies and gentlemen, is a bullish divergence. Now, granted, it is on the 15-minute chart, which to me signifies that even though a reversal seems imminent, it does, so far at least, based on these, suggestions here. Because it's on like a smaller time frame, that also means that the reversal isn't going to be a reversal that's going to last for like the next few months. To me, that suggests a reversal that'll last for maybe the next 2 weeks, maybe a week, 2 weeks. I would say about 2 weeks is my current guess. That's what that suggests to me, right? 30 minutes, same concept over here, right? You can see when we dropped to over here, the 643, we dropped all the way down to 20 on the RSI. Then we went even lower on the 30-minute, right? It's a similar concept, just on a slightly longer time frame. Ideally, what you can do if you want to determine like how much weight does this add is just by keep going up in time frame until that bullish divergence is no longer anywhere near as obvious. So you can see in the 1 hour, it becomes a little bit less obvious. It's still here. Like we have this kind of general level, which is over here. And then we have this drop, which was lower than this area. but the RSI is still making a higher low. So we can go all the way to the 4 hour. Even on the 4 hour, actually, we're getting a decent bullish divergence. So here we dropped all the way down to 620 roughly. The RSI came down all the way down here. We were chilling pretty much all the way down in the 25 levels. Here we dropped pretty much to the same level, like extremely close to the same level that we were here. RSI didn't even break 34. Another bullish divergence. So these are bullish divergences when the RSI becomes a leading indicator of what potentially is to come. So because the RSI is setting higher lows, but while the stock price is essentially setting either lower lows or essentially the same rough lows that it was before, like in these two cases here, it's a bullish divergence. So that's a good sign. But you can see as we get on the longer time frame, it gets a little bit less obvious, in my opinion, which is why it's telling me that it's not going to be like something that's going to last for the next few months. It might, but to me, this seems more of like a slightly shorter term, probably more aggressive bear rally that we'll get, which is something else that you want to pay attention to. That's personally one of my favorite tools to look at. I've used this several times way back when we were still trading like all the way up in these levels here. Where was it? All the way when we were like trading up in these levels, like here, like I use this all the time. And I personally think it's a fantastic way to determine what's potentially to come. This is not something that'll happen, overnight or the next day. This is just an overall potential change in direction and sentiment. I personally like this a lot. I use it a lot, and hopefully you guys, maybe potentially learn the power of it as well. So that's kind of what I'm seeing at the moment, guys. That's kind of, the major aspects of it. Now, as usual, with the weekly week coming to a close, we want to take a look at the weekly candle, and then I'll show you guys something else after as well, actually. So the weekly candle, once again, another red weekly candle. Not surprising. I mean, at this point, we're kind of used to it. But the big thing is the fact that you can see how much buying pressure is being added here. Unfortunately, the week did close a little bit lower than, it would have been nice to see, in all honesty. Like, it would have been nicer to see it somewhere closer to this kind of 655 level, or even higher potentially. That would have been nice. Maybe even higher than like 660, like above 666, maybe actually would have been pretty decent. And the reason is because, it's still kind of setting this kind of lower area here. So it's not showing as much buying pressure as one might want to see, which isn't like, it's not horrible. Like, it's not that bad, but it's just, it's not as good as it could have been. It could have been better. It could have been prettier. It could have given us a little more confidence in a reversal. So, there are still some signs pointing to some weakness and showing some weakness, but I personally still think there's more signs pointing to a potential reversal here. Again, a bear market rally essentially, than it is to just continuing down. Because you can see how all of these wicks here, pretty much from 650 all the way down to pretty much 620. Anytime we fall in this with these 3 weekly candles, it just gets bought back up like 3 times in a row now, essentially, which is a good sign. But again, the issue is the fact that this time it didn't get bought back up as high. That's the only problem here, I would say. But nonetheless, it shows a lot of buying pressure in this area 3 times in a row, pretty much almost, which is a good sign. It's a bullish, it's a fairly bullish sign. The buyers are definitely stepping in at these levels. People are willing to, start spending at these levels, which is good, which, the more we can defend this area like this, the better, and the more the bears are going to run out of steam is another way to think about it, which is really, really important as well. So again, these are all the signs that are, in my opinion, pointing to a reversal. But let's take a look at a bigger time scale, right? So that's kind of like the shorter time frame, right? That's what's potentially the next, like, couple weeks to a month roughly. What's going to happen in the longer time frame, like maybe looking out to like September, October, things like that? Well, that's where the moving averages come in. We can start looking at these 3. So on the daily, you can see we're well below all 3 moving averages, being the 50, 200, and the 100 daily moving average. Well below all 3 of these. So it's essentially useless there. However, on the weekly, if we go over to the weekly, this is where it gets a little more interesting. Now, you can see the yellow one is the 50-day moving average. This kind of purple one here is the 100, which we're below, which isn't good. That's not ideal. It's currently sitting at 725. Not ideal, but it is what it is. But then most importantly, is the 200. People view or put a lot of weight on the 200-day moving average. That's like a pretty big one for a lot of people, a lot of traders, a lot of even investors, honestly. And the main reason is because it just holds a lot of weight. It's like a very heavily weighted one. Now, the only reason I wouldn't put as much weight into this is because Tesla on the weekly hasn't really traded long enough compared to like an even like an Apple sometimes, you know, to really give it as much credibility, in my honest opinion, which is why I wouldn't be surprised to see Apple come down to 100. Currently, Apple's like 100 to 200-day moving average is at 100. Wouldn't be surprised to see Apple at some point collapse to 100. But that would essentially mean that Tesla collapses to about 400 as of right now, as of today. If we get a bear market rally, this will start moving this moving average up, as it, especially if we get a bear market rally, as it kind of slowly eases up and slowly starts heading up towards we currently are trading in. But the point that I'm trying to make is, remember when I said that my ultimate price target is around this 450 level? I strongly believe that by the time, which I still think I genuinely believe that at some point in the next, you know, several months, we will fall down to this level, whether it's next month, whether it's August, whether it's September. I do think it'll happen in probably August or September, probably closer to September in my opinion. But I do believe that once this happens, this, it very well might, that we will drop down to the 200-day moving average, which will probably at that point align to that 450 level. And in my opinion, that will be a pretty decent area to start buying in, if you want to, you know, start buying, not financial advice, but if you want to start accumulating, maybe adding some more shares, etc., where we can also get potentially the actual bottom and get a nice bounce from there as well. That's kind of what I'm seeing on the longer time frame, again, around September-ish, give or take. So yeah, that's kind of what I'm seeing, guys. Let me know what you think down below. Again, Monday is an off day, so I won't have a video most likely on Monday unless something happens that I want to talk about. But yeah, thanks for watching. A bit of a longer video. There's a lot to talk about. But ultimately, I'm, you know, to make the TLDR, I'm expecting a bit of a rally coming up. So other than that, thanks for watching, guys, and I'll see you on Tuesday. Peace.